Cardano's ADA has fallen by over 13% since the 21st of May. This move to the downside, unfortunately, doesn't look like it has yet finished, but there are some glimmers of hope. In today's video, we will be taking a look at the technical analysis for Cardano's ADA, sharing my short-term price predictions for Cardano. Guys, let's roll the intro and get right down into it. Hi guys, welcome back to the channel. My name is Nick and today we are of course taking a look at Cardano. If you get into today's video, find it useful, informative, smash that like button. Let's see if we can hit up to 500 likes on today's video. If you're new, welcome, subscribe and stay up to date with everything that we do here at 𝗕𝗘𝗪𝗀𝗀. So here we have Cardano paired up with USDT. We're on the 1-day Binance chart and we can see a little bit of slippage to the downside here for Cardano's ADA. Okay, we can see that from our recent swing high on the 21st, we have come down quite aggressively by 13.2% if I can talk today. Now, this move has the potential to continue slipping down, but we have already met minimum expectations. So there's a few things we're going to be keeping an eye out for here for Cardano's ADA. Okay, we've got the targeted range, a potential move towards 39.96 and 41.3. This would be a three-wave pattern coming in like this. Okay, I'll remove the fibs so you don't have to see those, and then remove some of the clutter. This is also potentially a part of a much bigger play right here. Now I'm going to show you what this one looks like as well as we kind of show you the potential. And again, you can see this 1 to 1.236 happens to coincide with our smaller move. You go ahead and take that one off there. And what I'll do is I'll actually remove a couple of these just off of here for now as well. Okay, and then you can see that this is a giant three-wave pattern coming down into this lower range. So the probability is that we have a kind of Elliott wave structure here forming that's showing us, unfortunately, with a little bit of slippage to the downside for Cardano. This isn't unusual. We've been talking about the risks around 38.65 for a little while now. So we want to see if we can avoid that if possible. But it could be that we end up in a diagonal based pattern here where we do go deeper than 1.618 at 38.65 cent. And that would basically be an indication that we're going to see even more slippage at a later date. But before we would go down even deeper, we would actually have to rally up first. Okay, so there's a few things on a macro, and I'll try and show you what that looks like and just by zooming out here. So it will look something to this effect, where we have this kind of idea of structure like this. Okay, so we'd have to come down and then rally up a little bit before going down again. And because this is a 5-wave pattern, this would then see a 3-wave correction to the upside, followed by an additional kind of 5-wave move. Okay, so we want to be aware that there's a few things to kind of be really kind of cautious on, but for the most part it does look like there's this idea of moves to the downside. Now, in order for that to happen, we have to breach the idea of these higher lows. You can see here that we're coming down and looking to test out a trend line here on our daily time frame. Should support be found here, we could narrowly avoid the idea of going down into those deeper areas. Of course, we do still have the lower highs as well as the higher lows. So we do have a few things here going on, this triangular based pattern. Now, this could be a wave 4 on our daily time frame, indicating that we are potentially even in a diagonal based movement. And this here could be A, B, C. This coming down is D, up for E, and then breakdown. Let me show you what that looks like. So you'd have an A, B, C, D, E kind of situation, and this breaks down. Okay, so it's going to be an interesting one. There's no guarantees in the crypto space. The E wave can also break out, by the way, and still be a valid E wave. So E waves are very unpredictable, but as you can kind of see, this triangular based pattern here has the Elliott wave triangle potential to it, and this is basically built up of 3-wave movements. So you'd have 3 waves here, you have 3 waves coming down here, and you have 3 waves going to the upside here as well. And then you follow this up with our current 3-wave pattern, which minimum expectations have already met, and then we would rally up. So find support on our trend line, rally up into that final movement. If I remove the A through E, you can kind of see 33333, and that's kind of where the potential lies for Cardano within this triangular base pattern, and then a breakdown into that final leg of a fifth wave movement. Okay, so as I had this drawn up before, it's one possibility, and I just noticed that it's possible that maybe we don't do this, but you know, we could have completed a wave 3 here, for example, up and then 4. I think that's less likely just because we haven't hit the 1.618. I don't think we can really classify it as that. It would be more of a W, X, Y, X, and Z pattern, but again, a triangle cannot appear there. So it'd be interesting to see how this one plays out. Now, I don't want to kind of confuse people. Elliott wave theory is a rather complex subject matter, but for the most part, it does look like if we break down from here, we just continue moving. No triangle, we rally up, find resistance, again set a new lower high, potential triangle move with a break to the downside in the fourth wave of the wave 3 before we rally up into a bigger wave 4 and then a final fifth wave move to the downside. Sounds complex, but it's not actually that complicated when you know everything that's going on with Elliott wave theory. Throw on our smart money concept, well, throw on our EMAs and our SMAs before we go into smart money concepts. You can see here that we do have some bearish movements on Cardano. We are lower than its 200-day EMA, which was most recently hit rejection on the 21st of May. We lost the 50 EMA same day, and then of course we've lost the 50 simple moving average, which was retested on the 27th of May, being rejection, and obviously seeing further slippage to the downside. So on the daily time frame, you know, we still see this unfortunately as a bearish pattern. If we take smart money concepts into consideration here, we are and still have got this negative change of characterization indicating that things are bearish on the daily time frame for Cardano's ADA, but on the smaller time frames, there's a change of character for more bullish movement. So again, that could be an indication that we actually do have a breakout to the upside coming here for ADA. We'll keep a close eye on it, but for the most part, that's kind of where that's going on there. We take off smart money concepts and we throw on the VPVR. Zoom out of this just for a second here. You can see where the volumes are really sitting, and there's a little pocket of void where the volume just doesn't seem to exist. But the main bulk of the volume is coming in at 38.6, as you can kind of see down here. If we lose this area, 38.65 is likely to get lost, which will then be an impulsive trigger point for Cardano. At the moment, we do have a pretty interesting point of control going on, specifically with where the price currently sits and the volumes that have been going in there. Most of the volume, of course, being up at 61.3. So interesting to kind of see how that one plays out. Now, if we go ahead and take a look at the smart money, at the stochastic RSIs on the daily are oversold. We have plenty of room to the upside on those. So that's looking okay and pretty decent. Our relative strength index is still lower than the 50 level, showing us with some potential slippage here on the RSI. No divergences being seen though. So we're not terribly too concerned about that at the moment on the daily time frame either. So for the most part, I'm not too concerned about Cardano. I think the long-term picture is definitely there, but on our kind of smaller time frames and the kind of the daily time frame, I don't think we've seen enough volatility just yet. I would still be expecting us to continue this bearish kind of movements that we've seen for a little bit longer. Roll this up into a weekly time frame, and everything here is actually just in line with what kind of expectations for a bigger kind of wave 2 situation, which means we might get that bounce, we might have that next move to the downside, kind of looking for those 30-cent areas and previous areas of support, right? So if we come in here and we kind of pull this across, this being previous areas of resistance that we've broken through, being 30 to 37 cent, this could be the area that we actually find the great amount of accumulation to occur, and where we could potentially then see that next massive leg to the upside. Okay, because I do look at this through that kind of bullish lens of 1, 2, 3, 4, and 5. So we have a 5-wave pattern. This is the beginning of a 5-wave pattern. Now this goes one of 2 ways. I've been through this many times before, but I'll do it once again on this video. You have a 5-wave pattern like this. This is always followed by a 3-wave correction like so, and then you would end up with an additional 5-wave move to the upside. This is known as a zigzag pattern. 1, 2, 3, or A, B, and C would be the technical term, okay, and would basically be the minimum expectations that you would have. Okay, the other way that this goes is you have an impulsive movement instead of your corrective movement, which would be a zigzag. So you'd have your initial kind of 5-wave moves to the upside, make this really small in line with kind of the expectations of what an impulsive move would look like. Okay, so you'd have your kind of 5-wave move like this. This would then be followed by a short 3-wave correction, kind of what we've been talking about. And then you'd have a really large kind of 5-wave explosive move to the upside. This will be followed by an additional 3-wave correction, and then finally a final 5-wave move to the upside. This is known as a 5-3-5-3-5. This is essentially a 1, 2, 3, 4, 5, and that's how the internal workings of it, right? So you can see that a wave 1 would be a 5-wave movement, a wave 3 would be a 5-wave movement, a wave 5 would be a 5-wave movement. It might sound overly complicated, but it's not. And this is really important because when I zoom out, what do we see over here? We see a 5-wave movement from 2020 up to 2021, and so we're looking for a 5-3-5-3-5 movement for Cardano, with this being the wave 1, this potential of 33 to 37 cent being the wave 2, a fantastic wave 3 up towards that $5 to $12, a correction for wave 4, and then finally that next surge to the upside, which would then bring you in line with an A, B, C across multiple years. And that, my friends, is how Cardano potentially gets up towards $38. Now, you can let me know your thoughts and opinions on all of this in the comments down below. Do you agree? Do you disagree? Let me know. If you found today's video useful, informative, smash that like button. If you're new, subscribe. And if you haven't checked this video out, what are you waiting for? Check it out, guys. I don't think you'll be disappointed.